Hello friends, thanks for joining me again. In front of you is the Bitcoin Futures chart. It's CME Futures and it's been a great chart to follow. I've done a number of videos on it over the last period. Very clear indications of what's going on, good and clear to read. And just recently, as probably you already know, Bitcoin's broken down. And although I talked about it briefly in my weekly charts, I thought we might make a quick video on it. So this is the chart going back a year or so. We zoom in a little bit and put some lines on. Now you can see that prices come back, and here there was a distinct attempt to support the market. This was buying, there's no doubt about it. Prices moved lower from the previous close. Really strong volumes come in, and it's closed up near the high of the bar, with the next bar being up. So this was most likely buying, and price moved up to the highs of the range, but there was no intent to push through at this point. Price comes back down, and there's a secondary buying bar here, almost the same as the first. An absorption bar in response. Price came down, there was very little selling pressure. You can see down here, volumes very low as price moved down there. And then there was actually a challenge to the breakout line here on this bar with the heavy volume. But it actually failed. And the next bar saw reduced volume, and what's come in here is heavy supplies come in. This bar couldn't break through on high volume, so the attempt to push through has failed. So the market's come back now in an attempt to absorb the supply that's being drawn out and perhaps remove it so that a secondary attempt to break out can occur. Now you can see these three bars here are all quite closely clustered together. The closes are all very close to each other. Price is not broken below the previous bar's low, and volumes have been increasing, and on this bar in particular, volume was very high. This is an attempt to support the market and buy the supply that was being drawn out and thwarting the price from breaking out above this line. In response to this bar, you would expect either an up bar in response, or you would expect a test for supply or a shakeout, and that's pretty much all you'd expect. Anything other than that would be a concern. And in response, this is what happened. Put those first two lines back in. Now, you haven't had an up bar in response, you haven't had a test bar, and you haven't really had a shakeout bar. Although it could, if you really wanted to consider it, it could be the first half of a 2-bar test, but it doesn't really look like it, and volume was only average. Now, whenever volume is around the average line, just below or just above the average line, it really means that what you're seeing has probably taken place. There's no hidden indication inside. So when you see excessive volume, even if it's on a down bar like this, excessive volume on a down bar, especially this one's closed slightly off its lows, you can probably suspect something else is going on in here. If that was only on average volume and the close was right down near its low, I'd be more prone to say that that was supply coming in. But when price moves lower on excessive volume, you should always be suspicious that there may be hidden buying inside that bar. The professionals have let the market come to them. They're not actually in there pushing it up, they're absorbing the supply. when it's excessive, you should be suspicious that this is happening until you see what the response is, and that'll tell you whether you're right or wrong. And in this case, you can see the price is up strongly on the next bar on much lower volume. That's because all the supply was bought in this bar. That left a supply vacuum in here in the range of that bar, because anyone who is going to sell at this level has done so. So it didn't take almost any effort being volume. It didn't take any effort to push price higher. Price floated higher with ease because there was no selling pressure in the market, because all the sellers had been temporarily bought on the previous bar. Now over here, price broke down and it's now right at last gasp support levels. If it breaks below there, price is going to see the 30,000 line almost certainly. That's where it's going to be headed. And the next bar did that. That's this week without 1 day's trading. There's 1 more day's trading to go for the end of the week. Now that was fairly predictable. You can see price was vulnerable on that last bar here. The support in this bar appears to have failed. Prices closed clearly below that bar, where previously prices was holding on quite well as supply was being absorbed. But this is a failure, and it wasn't certain at this point, but you can actually see prices gap down from the previous close there and accelerated lower. The next support line would come through here, and price is only barely holding on to that, or attempting to at the moment. We'd have to go out to a larger time frame to see where the next potential support line is. You see, this should be strong support here. If that's clearly broken, price is going to come into this level here. And there's a gap in the background too that may be targeted as well here. If we mark that gap in. Gap theory is interesting. Sometimes I think it only happens because it's there and people know about it. That's why it's targeted. The gap's not closed yet, so that could certainly be a target at the moment. And gaps sort of act like a pivot. So although there's no trading there, it can be considered a pivot point. At this point, I think there's still some chance price will hold on to 30,000, at least for this week, and we'll see what happens in response. But my main point was, just to quickly go over it again, my main point was this was a failure here. When price closed clearly below that bar, on average volume, true volume, then price was really vulnerable to break down. It didn't mean that it had to, it meant that it was really vulnerable to break down. And you can see once price gapped here below the low of that bar, that was intent. As soon as you saw that gap, if you weren't short and you were long and you were wanting to get out, you should have just got out, because the gap below was showing intent. Here's a gap over here. This was showing intent previously. The gap over this line here showed the intent of the market. The price pushed away. Here's another gap over here. It's signalling the intention of the market. As soon as you saw the gap down here below the low of this bar, and in particular that bar, then price was going to head lower here for sure. There's another gap over here. Price gap below this bar's low. Price attempted to come back up and recover, but there was no recovering. This line held firm and price accelerated lower. Gaps generally show an intention, and they're almost always deliberate. There's a little tiny gap just here as price broke below the low of this bar. And so now we wait and see if price can hold on to 30,000 this week. If it can't, it may end up moving substantially lower again, close that gap, or work its way to the next previous support zone. Okay, thanks for your time. See ya.